So hey guys, back again for another stock watch list. So in today's episode, we'll be looking at ZIM Integrated Shipping Services. So ZIM is a shipping company and ticket symbol ZIM. So let's get right into it. So ZIM Integrated Shipping Services is a shipping company that provides container shipping and related services in Israel and internationally. So the company provides seaborne transportation and logistics services comprising dry, reefer, project, out-of-gauge, break, bulk, and dangerous cargo services, inland transport services, and blah blah blah. So basically, the company operates a fleet of 101 vessels with a global network of 69 weekly lines and was founded in 1945 with its headquarters in Haifa, Israel. So we'll be looking at its financials so far. And in terms of its financial for the past 3 years, from 2017 to 2020, it has gradually grown from around that $3 billion mark in 2017 to right now currently near that $4 billion mark. So it has grown about 1 billion in terms of revenue from for the past 3 years from 2017 to 2020. So in terms of earnings, it's quite a how you say, it's not stable in terms of its earnings, where by 2017 there was a net positive in terms of earnings. Then 2018 it went down. Of course, COVID. That's when 2018, 2019, that period. So it went down. So Zim struggled in terms of maintaining its earnings and increasing its earnings over a year. So as always, revenue is different from earnings. And again, I repeat, revenue is the income a company generates before deducting expenses, while earnings represent the profit a company has earned, and it is calculated by subtracting expenses, interest, and taxes from revenue. So in terms of recommendation trends, we'll be looking at the past 4 months in terms of June, July, August, and September, and mainly focusing in terms the analysts have focused on July and August as the months they want to look at. And in terms of both the months, we can see that there is strong hold and strong buy in terms of this company. So they are not quite sure where the company is at in terms of potential as a stock and where is it heading, because shipping companies right now, there's a demand for shipping and not enough supplies. Cargoes you know are having trouble being shipped from country to country. Goods are being left unshipped, if you might say. So yeah, there's a supply for the company, but there is demand for the company, but there is not enough supply in terms of the shipping industry. So yeah, right now in terms of recommendation rating, it's right now sitting at a 2.1, which is a buy. So you know if you are as an investor, potentially looking at this company for investments, of course, uh, you want to see a recommendation rating of a buy, which is good for you as a potential investor. So yeah, right now in terms of analyst price targets, right now it's currently sitting at that 58, $59 mark. Average is 63. Low it was 26.5 and high it's 90. So we are currently sitting near the average with a huge potential, you know, uh, right ahead of us. So moving on, as always, we're looking at the 1 year stock profile. And in terms of the last year, it has honestly been on the rise, gradual increase from Jan till this current period. So right now sitting at the $59 mark. Its 52-week high was 62 and its lowest was 11. So it's continually grown and definitely recently it hit its peak of $62, and right now it's stabilizing at that stock level to say. So in terms of 6 month stock profile, again it has been on the rise. Recently it took quite a big increase from this period of July to August. It took a sharp increase from there till right now currently sitting at the $59 range. It hit its peak right here at the $62 range, and yeah, it's quite stable right now at that 58 to $62 range. So moving on to its last month, and for the last month, we can see from the period of August till currently September, 25, again a gradual increase, but you can see that there's a cup shape over here. So it reached its peak around this year, the $62 price range, and it took a sharp decrease and it was stagnating at this level, and recently it took another sharp increase to reach that 59 $60 range. So we'll be looking at why uh, what made the changes to this stock, and what's the potential to this stock in through the articles that analysts have written. So, first article we'll be looking at is top shipping stocks for quarter 4 2020. So, in terms of the shipping industry, it includes companies that transport cargo around the world, from grains to apparel to electronics to appliances, so any type of goods. So, in spite of the term shipping, these companies often transport commodities and merchandise by air, sea, and on land by truck or train. So, they also provide storage and other logistics. Some of the largest shipping companies in the world include, you can read AP Moller Maersk, and I'm definitely not reading that. So, the shipping industry has a significant mismatch between supply and demand, which has been exacerbated by global supply chains that have been strained amid the pandemic. So the pandemic had a huge impact in terms of the shipping industry and the progress of the company in terms of revenue and earnings and all those things. So moving on, in the past year, the shipping industry has slightly underperformed the broader market. um, the benchmark Dow Jones US Marine Transportation Index has provided a one-year trailing total return of 33.4% compared with 34.3% for the iShares Russell 1000 ETF. So these market performance numbers and all statistics in the table below are as of September 14. So we'll be looking at graphs and tables of the progression of the shipping stock of ZIM. So the best value shipping stocks. So we're focusing on ZIM. So in terms of its price right now, it's at 58. Right now near the $59 mark. Market cap of 6.7 billion. So it's one of the biggest shipping companies out there. I think it is the biggest, honestly, shipping company out there in terms of market cap, in terms of global presence as a shipping industry. So yeah, so in terms of its P ratio, price to earnings ratio, which is 3.4, which is profit to earnings ratio, I'm sorry, which is 3.4, which is really good for a shipping company or for a shipping stock to say. So ZIM Integrated Shipping Services is an Israel-based provider of seaborne transportation and logistics services. The company operates, this is just a description of ZIM again. So ZIM reported record financial results for quarter 2 2021, including a more than 34-fold increase in net income as revenue more than triple YOY. So the company cited digitalization initiatives and new lines with address profitable underserved routes as drivers of performance. So it hit a record financial result of for the quarter 2 2021. So it's a recent quarter, and they're looking to progress even further in the next quarters and even the next years. So the next article we'll be looking at is here's what makes ZIM integrated an attractive bet now. So again, ZIM is in a sweet spot now as it gains from increased freight rates, high demand owing to a strong global economy, a balance sheet strengthening, new contracts, and other strategic initiatives. So the stock of this provider of container shipping and related services has seen the ZAC's consensus estimate for current year earnings being revised 68.8% upward over the last 7 days. So presently, ZAC's rank number one, which is a strong buy player, carries a VGM score A. So what is a VGM score? A VGM score rates each stock on their combined weighted styles, in terms of the most attractive value, best growth, and most promising momentum across the board. So it has proven time and again that the stock with a strong ZAC's rank and a solid style score offer best investment opportunities. So, so in terms of VGM score, it is currently sitting at A, which is the best VGM score that a company can get, and ZIM as a shipping company is right now a really attractive company, a really attractive stock to look at if you're a potential investor. So we'll be looking at the graph right now. So so in terms of earnings, expected to grow, their earnings is expected to grow from 136 and 520% respectively. So, oh, that is sorry. So for in terms of 2021 sales and earnings, they are expected to grow 136% and 520% respectively. So year to date, the stock has skyrocketed 316% compared with its industry's growth of 8.6%. So that's a huge difference. So it just tells you that ZIM is going on another level to where the market is right now in terms of shipping stocks and shipping companies. So they are ahead of the game. They are progressing even further than what other companies are progressing. Of course, ZIM top of their market, top of the shipping industry right now. Of course, you expect them to go on another level and not, stagnate near where the market is. So if you look at the graph, you can see that ZIM is progressing very much on another level compared to its competitors, which is really good, in terms of a company that it has potentially great revenue coming in, a company that you intend to invest in. So moving on. So though the stock has risen to such high levels, a continued surge in demand is indicative of a very positive outlook for the second half of this year. So let's delve deeper to see the factors favoring the stock. So recent contracts and initiatives bode well. So in July, the company announced a second strategic agreement with CPEN for the long-term charter of 10 7,000 TEU LNG dual-fuel container vessels to sail across ZIM's global niche trade. So the vessels will be delivered to ZIM starting the first quarter of 2023 and through 2024. These are ideally sized to be employed in multiple places in which it operates. So ZIM has great contracts with, multiple companies in terms of shipping goods, shipping cargo, and all that. And it's not even, in the coming quarters or in near the end of the year or the start of next year. It is from 2023 2024. So there's huge potential in terms of this stock, in terms of the company growing and all that, in the next couple of years and more. So the company also holds an option until the end of August 2021 for the long-term charter of 5 additional such vessels. This transition follows its initial February 2021 agreement with CPEN for the long-term charter of 10 15,000 TEU LNG fuel vessels to serve its Asia to US East Coast trade. So ZIM is a global shipping company, so it has contracts with different other companies globally. So in terms of demand, there's huge demand for ZIM right now, huge demand for the shipping industry right now. But in terms of supply, there is not enough shipping carriers where what do you call that, where shipping companies are able to transport cargo from country to country, from continents to continents. So during the second quarter, 9 new lines were launched, including premium high-speed services to meet the explosion in e-commerce demand and provide the viable alternative to air freight. So the company continues to take steps to add more strength to its trans-Pacific presence, which remains a key trait through its partnership. So in terms of the article, they are looking at how there's huge potential in terms of ZIM's future, in terms of its ability to, partner companies, in terms of having contracts with companies for shipments, and it's not even in the next year, it's for years to come, 2023, 2024, 2025. So by preparing contracts for future years, they are already locked in terms of if another huge what do you call that, financial negative financial impact occurs, they are already in a stable state of whereby they are locked into companies in terms of being able to gain revenue in future years. So moving on, strengthening balance sheet a tailwind. So backed by a strong performance and solid cash generation, the company is solidifying its balance sheets. Its leverage has continued to trend downward, with the net leverage declining to 0.3 in second quarter 2021 from 5.3 in the first quarter of 2019. So the company continues to prudently allocate capital to future developments, including strategic investments to secure its core operating fleet. So they are looking at the future. This company, of course, it's not looking for the now, it's not looking for short-term gains, it's looking for long-term potential gains, you know, uh, as uh, as a company basically. So the company also intends to share a portion of its profits with its equity holders on this front, confirmed to distribute 30 to 50% of 2021 net profit as dividend in 2022. So as potential investors, you want to look at this because they are planning for dividend um, distribution to their shareholders or stockholders to say. So it recently paid out a special dividend along with the regular dividend. So guidance raised instills optimism. That's the next point we'll be looking at. Aided by a sturdy second quarter performance, a sustainable, robust environment, and the contribution of freight contract clinched at higher rates, the company once again lifted its 2021 outlook. So yeah, revised 2021 adjusted EBITDA is assumed between 4.8 billion and 5.2 billion, while adjusted EBIT is envisioned between 4 billion and 4.4 billion. So yeah, so basically they are very optimistic about where this company is going. Basically, the whole article is just stating that ZIM has planned for the future, is looking at the future, and is already built different platforms in terms how are they going to gain revenue, how are they going to grow as a company for the future. So basically, these are long-term investment in terms of you won't see huge gains in the in the near future because that's not where ZIM has potential in. ZIM is not looking at the near future; it's looking at the long-term path, their long-term plan. So that's why where as investors you want to focus on as well if you're investing in ZIM. So as always, we'll be looking at what the people are saying, what potential investors or current investors are saying, and what just the general public are their opinions on the company and where it is heading to. So Randall says another positive article in FreightWaves regarding container shipping profits suggests the peak earnings will be in 2022. So there's next year, not 2021. Might start seeing more earnings revisions upwards. So like I said, ZIM took a heavy loss in terms of their earnings, mostly during the pandemic period. So right now they're recovering. There's demand for shipping industry. So these are all good signs. So as years go on, ZIM is just going to grow in terms of its revenue, in terms of its earnings, and as a stock, it's definitely going to go on the rise. So it's currently sitting at the $59 mark. You know, it is definitely going to head into the 70s, 75 dollar range, but it's unsure how soon it's going to reach that point. It might take a year to reach that point, but yeah, this is a definite long-term investment, and if you are interested in keeping some stocks, you know, to look at, after 2023, 2024, this is definitely a stock to go to. If you're looking at short-term investments, this is definitely not a stock I would recommend. There are better stocks to look at, but yeah, there are definitely gains in here in terms of ZIM as a stock. You this $59 mark is definitely not going to stay. It's not going to go down. It's going to stagnate until it reaches, it slowly gets to that 70s, $80 range, and that's when investors are going to gain the most. So yeah, so that's for today's episode of Stock Watch List. We looked at ZIM Integrated Shipping Services, ticker symbol ZIM. And if you guys like this video, hit that thumbs up button, hit that subscription button, and of course, hit the notification bell to notify you of more videos. If you guys interested in this stock watch list, let me know in this comment. Let me know what other stocks you would like to for me to look at, and let you guys know, of course. So once again, thank you. Hit the thumbs up button, and goodbye.